Welcome to the AM briefing video presented by microstrader.com, where together we trade better. Happy weekend, everybody. This week's scripture is going to be 1 John 3:16. This is how we have come to know love. He laid down his life for us. We should also lay down our lives for our brothers. We'll talk more about that throughout the week, but absolutely fantastic. Tip of the day: small losses happen. Large losses are created. So let's look at this week. Monday, we have nothing really. Tuesday, consumer confidence. Wednesday, nothing really. Home sales. Thursday, unemployment claims and some durable good orders. And on Friday, PCE, which is a bit of a market mover. So to me, green days all this week. Friday is going to be caution. Number one, it's Friday. And two, the PCE. Now, probably the biggest event this week is NVIDIA earnings. And in fact, here's the earnings for the week. Once again, this is a graphic from Earnings Whisper on Twitter. Feel free to go follow them or screenshot this as well. And these are the people that are reporting this week: Home Depot, Lowe's, but the big one, in my humble opinion, and of course, according to the market as well, is NVIDIA. Although my eyes are going to be on the Krispy Kreme donuts, but that's just me. So before we get to the chart, let's review what I said yesterday. I believe 1775 is the bull bear line, that until we can take out the 1775 in this trend line, you've got to give the bulls the benefit of the doubt. So when we opened up, we are laddering up. If you drew a trend line, this is the trend line, right? We are laddering up, but we are coming to a high time frame backside. And when we opened, we talked about where would I be interested in a long, because I'm certainly not shorting yet. We're above the bull bear line, laddering up with the all-time highs in sight. Because if you remember, all the cash indices have hit all-time highs. In fact, let's go look at them for a second. So here's the QQQ. It took that all-time high, and of course, big vomit day there. NDX, same thing. It made an all-time high, came in. SPY hit the all-time high, came in. SPX hit the all-time high and came back in. I will adjust these all-time highs. So the cash indices all made all-time highs. I was hoping ES would follow. Everything looked like it. Every dip had been bought, and we're laddering back up. So in the overnight session, we did come to this high time frame backside, and I told the group these things typically bounce 15 to 25 points. These are great trades. These are great future trades. These are great option trades. So where would I be interested in a long? Well, I told the group I would be much more interested in a long, once again, against the touch of this high time frame trend line that we've talked about all week, and coming to the bull bear line. The bulls are innocent until proven guilty. How are they proven guilty? Something has to break. Preferably a trend line, laddering under a daily low. These tip your hands to, hey, things have changed. So we opened up, and let's just hit the candle replay here. And I had an order setting at the bull bear line, but it had its bounce before it got to the bull bear line, so I removed it. Remember, at this point, the bulls are still innocent until proven guilty. We've got this bull bear, and we have previous day low. So I missed that long there. I'm not going short yet. Not interested in a short yet. I'm still giving the benefit of the doubt to the bulls. Call me crazy. That's my line of thinking. Until we can ladder under an RTH low and break a trend line, I've got to give the bulls the benefit of the doubt, in my humble opinion. It fought here at the bull bear line, which basically means long above and short underneath, okay? That's what that means, in my humble opinion. And then we laddered underneath the bull bear line. My eyeballs comes to the RTH low now. What am I looking for? Liquidity grab, ladder back. Of course, that's exactly what I'm looking for. That's the prudent thing to be looking for at this point. Yes, we look like we're breaking the trend line. It looks like we're breaking the bull bear line, but let's see what happens at the RTH low. Coming back to the bull bear line, coming back to the trend line. All right, grab the liquidity. Looking for evidence of laddering back up. Are we going to get that, or has things significantly changed? Have things significantly changed? I'm not just going long to go long. No, sir. We have these strong candles coming down with some laddering, but we are at the RTH low. Prove to me, bulls, you are going to respond to this push down. Prove it to me. That's what I'm looking for to go long. Now, I'm going to go ahead and load our strong levels because these play a role. Warning shot to bulls. We were here previously, and now we're coming to this strong level. I took a long off of this strong level, still giving the bulls the benefit of the doubt. And we touched it and had a nice rebound. So I'm peeling contracts off because we are laddering down, but we bounced off one of our strong levels. I am telling the group now, here's what I'm looking for. If you're not already long, and I understand if you did not take this long, trust me, we are going to be looking for, can we get back into yesterday's range, get over this strong level and go? That would be a beautiful setup for a long if you didn't take this sort of knife catch long against the strong level. Don't blame you. Wait for evidence of laddering. Make the bulls prove it to you. So are we going to ladder over the overnight low? This is what I'm looking for. Failure, trying again, and failure. Now, we are mapping out while we're trading, what is our long and what is our short here? I need to get over the RTH low. I needed a strong fair value gapping candle. And let's get into the range. And there's my long. Where's my short? It's going to be under this level. It was heavily defended. They're trying to ladder it up. If they give it up here, we're probably coming down to the next strong level. That's how we're calling price action at this time. And then failure. There's your short. There's your short. And in fact, in the group, because some of my traders like Scott, he took that long with me and he's being wild in the Leap account. It's OPEX Friday. He's not trading his cash account, being wild in the Leap account. And I said, take the 87 short. And then I told him to reverse at 54, which is here. That if you're really trying to play some cowboy, that's how I recommend you play the cowboy here. So there's your short. Many of my traders were short there, targeting here, exiting contracts here. Now, if you have multiple contracts, I recommend you peel off as you're going. Know where price is going to bounce back in your face. And then ideally, you want to play perfect chess by keeping a runner. So at this point, here's a short. This is another core strategy short, two beautiful backside shorts. And we go straight down to here. And remember, I said, play the reversal here if you're being cowboy, or if you're not short there, where's the next place it's going to bounce? The truth is, it bounces both directions. It bounces off the strong level. Very nice, but it can't continue. So this is why keeping a runner can be very profitable. You can remove contracts because who knows, that might have been the point that this thing laddered up. They took it back, V-shaped recovery, ripping the head off, going to the north. We don't know what price is going to do. All we can do is follow price and enter trades where price is going to bounce. And another bounce off the strong level. Okay. Now I'm going to bring up, let me move this because I'm going to bring up the trend lines here. Okay. So we got a bull bear line down here. This is my high time frame bull bear line. Okay. Looking at the chart from a higher time frame perspective. I was like, oh my gosh, are we going to actually get down to the bull bear line? And So we kept laddering, bounced off that strong, come back in. We're coming down to the bull bear. Didn't quite make it, but that is where the target was. Beautiful, beautiful trading today. Once again, bouncing both directions. There were longs. The best trade was going short here, knowing that we had taken out the bull bear line. We had taken out this trend line, laddering down. And if you'd have kept a runner, this was a 60-point move from here to here. Now let's talk a little bit about the trend line. So we had this trend line here. Just as a reminder, hey, we are laddering up. The play is probably, most likely, long or flat. It's very difficult to want to short when before an all-time high, right? But price broke the trend line, broke it with a vengeance. That's your first warning flag of, uh-oh, is something changing? That's true on a low time frame trend line, and it's especially true on the high time frame trend line we just talked about. So I like to establish a overnight trend line. I like doing that. It helps me and my traders stay on sides. And then that trend line is broken. RTH opens up, and that's a different animal. You have real volume. So what happens is you now have a new trend line. This thing is going this direction. It bounced off that strong level and is laddering back. Okay. It broke this primary trend line, but then what do? You just have to swing it back out once it starts laddering. Now you are definitely laddering down and you have a very strong trend line. Then what happens is price actually goes parabolic, doesn't it? Price actually goes parabolically to the south. What's one of our top rules? Don't counter a parabolic move. It's very difficult. If you do, small if at all. Small if at all. Never making things worse. That is so important. And the next thing that we say every single day in our groups, what are the break levels telling you? If you're going to counter the trend you see on here, the trend lines that are here, the commentary that we're having on Zoom, and the break levels, small if at all, never, ever making things worse. Plus, it's option expiration Friday. One loss and you're done type of trading day. All right, the next topic I want to discuss lightly here is this range, top of the range. So whenever you have a range, let's just draw out a range like this, okay? This upper portion is typically better to look for a short for price to come back in. When you're in the bottom of the range, you typically want to be looking for a long. But when you're this close to the all-time high, and the other cash indices have made an all-time high, it is real difficult to want a short. And that's why I told my group I'm not interested in a short until we lose certain levels. Great bulls know where the bears are, and great bears know where the bulls are. And that's when you switch teams, is when it changes, when it flips over, when the bulls are now in control or when the bears are now in control. Knowing when you lose those levels makes trading easier and not countering who is in control. All right, so let's update our chart for the levels that we need to move forward into next week. Well, the first thing we see is a massive amount of single prints. So I'm going to turn on the magnet tool. I'm going to select this tool here. And there's the first set of single prints. I'm going to call it single prints. I'm going to move that into my single prints folder. Let me turn on the folder. So and I'm going to duplicate this level, holding down the command button on a Mac. Keeps it in the same folder. Another set of singles, another set of singles, another set of singles. Wow. When you see these single prints stacking up like that, and you see the trend line going parabolic, countering that move can be very hazardous to your mental and financial well-being. So we have this VPOC from Wednesday that we're going to carry forward as well. And I think that's the only levels there that I'm going to bring forward. Let me turn on these levels here. Okay, no longer need this. So one thing that's interesting, we've been talking about the 16 session POC. And in fact, let me move that. So we had the 16 session POC. Well, value area low was here. And look how price in the overnight basically came to the value area low and the RTH halfback. Notice I denote both of them in my marking, and that's the halfback from this day, and price propelled away. So that was definitely a very good level. Don't need it now. I don't think the 16 session POC, I'm actually going to keep on my chart. But here's what I'm going to do is I'm going to delete it. And I'm going to move this back to the IB high, and I'm going to add the note previous 16 session POC. That way, when we get back up there, I'll go, oh yeah. And this was an IB high with a 16 session value area high. No longer need that note. We've got this overnight high here that we want to denote. Overnight high. And if you want to, what you do is you put a space, you put London. That way you know it is the overnight high and it's London's overnight high. If you wanted to be that specific, I like being that specific. IB high, London high, Asia high, the actual overnight high, and the RTH high. Now, this is also the weekly high, isn't it? So let's go ahead and demark this weekly high. Now, in our essentials indicator, that is already marked for you, but I like to manually mark it myself. Now, we made it way down here, basically to, here, let's go ahead and mark this. Boom. And I want this to be RTH low. And yeah. All right. So on this RTH low, what do we want to mark this? Weekly low. So the only thing we're marking here, anything that was new that we need to go into the week. I don't need to go further back because I do this every week. So the Monday was at half session, nothing. So let's look at these major trend lines here. The all-time high, skimming here. You got to go to a higher time frame chart to see the origination of this. But this trend line here, and where are we? We've come right to it. What happens if we break that? Watch out below. Watch out below. Now, you could do exactly what it did here. Come here and make new highs, make new highs, make new highs. That's why you can't prediction trade, but you need to know where you're at. For me to want to go short right here against this trend line doesn't make a whole lot of sense. And in fact, if we start pushing up really strongly, going short after a high time frame trend line bounce, going counter to any high time frame trend bounce is not the greatest trade in the world. If you do, small if at all. No single loss should knock you out. It's no big deal. But in general, when we come off a high time frame level, am I looking to counter that bounce? No, I'm not. No, I'm not. So you can see where we're just right here at it. It'll be interesting to see. There's also some session lows right here and a weekly low. Could we dip down into this weekly low, get back up over this trend line and go and make all-time highs? You bet. But for me to be interested in shorting in this trade location would be really difficult. I think I would need to take out 59.87 area here, and then I might be interested in a short. So let's come over here and look at our indices. So we were definitely all on the same train. This is why we look at these indices like this. Are we all on the same train? That's what I'm looking for. When you're all on the same train, countering a train direction could be hazardous to your mental and financial well-being. So let's move this to the low just to prepare for Sunday night's opening. Push this here. This will be the new range that we're looking at. We're going to go here. We're going to go here, and I'm going to go here. So we're going to bring that in. And you just adjust these manually. Could I set an indicator, do it? Of course, I already have the lines there, but I like to manually move these things, gets you involved in the chart. Not everything needs to be just automatic, in my humble opinion. Now, I have the automatic lines there to help me, guide me, but I like to move them because sometimes I gain new insights into how these things are relating to one another. And that's valuable when you're leading a group. Let's pull that in. Very nice. All right, so those are now prepared for the week as well. Let's come back over here. Let's adjust these things to the new all-time high, SPX, SPY, NDX, and QQQ. Let's bring this over here. There we go. So now we have adjusted those as well. Let's go back to the main chart and just look at it again with a fresh set of eyes, zoomed out a little bit more. Let's remove everything. I'm even going to turn off the sessions. Let's go to a 4-hour chart. Let's pull this thing in. And where are we? We are just in massive stupid chop, are we not? I'm going to take this and let's just pretend these were 3-minute candles. Let's pretend these were 3-minute candles and we're looking at this. You're like, where does the range of all of this seem to be? We're only right here if you go all the way back to October. We are just entering into the middle of this super high time frame range. So this area here is difficult to trade. Am I going to trade it? You bet. But I'm going to be cognizant of where I'm at on this really high time frame level here. In fact, you could take it back to here. I mean, how far is that? 143-day range. But it's worth zooming out and looking at that data. It's worth doing that. You can see every time we're up here, just like I talked about in ranges earlier, when you're up here, it's better to look for shorts. When you're down here, it's better to look for longs until it breaks out. Will that happen this week? Well, we will have to see.
Stay green, my friends. And to learn more about our group, go to microstrader.com.